Hey guys, how's it going? In today's video is going to be on Medmen, my due diligence on Medmen, why I believe Medmen is the #1 company in the US. That's the title of the video anyways. I think Medmen can become the #1 company in the US. Not saying they not potential. They have potential to be the #1 company in the United States. I'm not saying they will. I'm just saying they have potential. For anybody that is watching this, you should definitely listen to this these 3 videos on the investor presentation. I've just finished watching these 3 videos and I learned quite a bit about the company. So I encourage everybody to do your own due diligence and check out and listen to these if you have time. And then also, I watched almost every single Medmen video on YouTube. Yes, I was bearish on the company in the future. I made a video about why I was bearish. In this video, this guy talks about how he thinks that like Medmen's goal is to become the #1 company in the United States. I don't know if they will, but there's a possibility. So yeah. So moving forward. Medmen does have problems, like I said. Now I'm gonna start off with the negative. Medmen founders to forfeit equity awards unless stock exceeds $10. So it reaches $10, they get some of their benefits. It reaches $15, they get some more, and then if it reaches $20, they get a lot. So yeah. So by unleashing this article is saying that yes, management is greedy. There's some truth to that. Maybe they'll change the attitude in the world in the future, but because like honestly, the management, if they're like holding shares into Medmen and they really work hard on the company, they will become rich, in my opinion, though, because they probably own a lot of shares already on Medmen, and in the future they're probably gonna give themselves some options anyway. So I think they should just come out and say, oh, you know what, we just abandoned our benefits. We want to work for the shareholders. We're not going to be greedy. Just if they came out with that, I think that would push the stock price even higher. But that is a concern moving forward. Like, you guys got to remember, management is greedy. Investors sue Medmen for alleged breach of, I can't even say that, duty. So yes, they are getting sued right now. So that is a concern. According to one of the videos here, I think on the second quarter, he was mentioning something about going to court and whatever, but he doesn't want to comment too much. But he's saying that they have no merit, saying that it's false and nothing's gonna happen. But there's still a concern moving forward. Piece of news could come out saying, oh, Medmen got sued and whatever, stock drops like crazy, and then the bottom buyers won't care, ignore that, and they'll just buy regardless because they believe in the company long term and they're swing trading. So no matter how much it drops, somebody will pick it up. At least this is just my opinion. Calling it bullshit. Nothing really happened. We still don't know for sure. We don't know exactly if this lawsuit is actually real. We don't know how much it would cost Medmen to pay it off, but they did get $250 million not too long ago, or at least $100 million to start off with. So they could absorb some of that I guess hit if that lawsuit actually came out to fruition. But this could also drag into court for years before it settles. So Medmen stock promotion draws regular scrutiny. Another article that kind of put pressure on Medmen stock. This also put pressure on Medmen stock, but it's changed now because of the big injection of cash they just got. So Medmen Q2 revenue grows 39%. So they made $30 million of revenue, and they had an operational loss of $61.8 million. That's a lot of money, because if every quarter they keep losing that much money, that's a lot. That's too much, right? But then you got, now that you look at Aurora is losing $239 million from last quarter. So, you know, Aurora is losing money. Medmen has mentioned that they're working on the operational costs. They are working on making themselves more efficient, so, you know, they can lose less money, I guess, in the future. But they're still trying to aggressively grow, because, you know, they just got $250 million from Green Growth, from Gotham Green, I guess. Okay, now on to something positive. A lot of cannabis companies in the U.S., they talk about the State Act. They're saying that the State Act could pass this year, and it would enable cannabis company to list on the New York Stock Exchange, or the NASDAQ. So, you know, that is really positive. That would cause a lot of stocks to fly high if the State Act was real. So, you know, let's see what happens. Medmen sells some real estate to asset newly formed cannabis relic, Treehouse, basically. Treehouse Real Estate Investment Trust, RET, I guess. This is a very interesting company. So what Medmen's strategy is, they're gonna be, they will no longer own their real estate. They would be leasing it or renting it. So they would pay, the Treehouse would pay them an X amount of money for their retail locations. This includes the new acquisition they got from that company called what is it? I'll bring it up later. I just forgot the name. But you know, they'll buy the real estate, giving Medmen some money, strengthening Medmen's balance sheet. On top of that, giving and then, you know, and then this company would collect rent, and on top of that, you know, it also plans to go public, and I'm betting that management and Medmen probably has some kind of investment into this company too. And according to the video, according to this Treehouse Real Estate Investment Trustee, they're talking about, you know, lots of institutional investors are interested in Treehouse. So, you know, when they public, they'll probably be able to raise even more money, and Medmen will be able to sell more property to, I guess, Treehouse. And Treehouse is probably also helping them get prime real estate location. That's what Medmen's strategy is. They want to get the best retail location possible. They want to make the best brand possible. So that's, you know, that's their goal. That's the thing. They don't care about a crappy retail location. They want the best locations possible. So, yeah. So Medmen to acquire PharmaCann for $682 million. This has not closed yet, but it will dilute your shares by 25%. So, you know, like, they have 475 million shares. You know, that's times by 1.25. So in the future, when this closes, they will have close to 600 million shares. But this would, this acquisition will increase their revenue quite dramatically. I wanted to point out that if you bought on exactly on that day that news came out, like on October 11, 2018, on October 11, 2018, the stock was trading $578. If you bought in right away, bam, you would have made so much money in a short amount of time. Like in 3 or 4 days, it went all the way up to $9. Yeah, I'm just saying, like, sometimes emotional buying can really pay off. sometimes like Canopy. I bought Canopy at $40 and it went all the way up to $60, and people were talking about charts. They were talking about how the stock was going to correct itself, move back down, but it didn't. It just went all the way to $60. I don't think very many chartists could actually predict that. Uh, and then when they announced the PharmaCann merger moving forward, the stock, was back to normal. It was December 24th. That was like the worst day on the stock market, like December 24th. Yeah, the stock was $3.64. So all that hype died down, and right now it seems like the hype is starting to build back up, but I could be wrong. Maybe this is just a small little bump, a pump and dump, and a fall back down. I mean, the volume really confirms that there's huge amount of buying, so buying pressure, or at least there's a lot of people interested in the company. $5.535 million. Yeah, okay, hold on. And then I found this that was kind of interesting. Medmen closes the $53 million Florida acquisition, giving them the ability to open up 30 retail stores in Florida. That's a pretty big investment, I guess I would have to say. Medmen enters the Canadian cannabis this was also interesting. Medmen did a joint venture with Kronos Group to make Medmen Canada, a 50-50 partnership between the two companies. Medmen Canada will be focused on a brand of nation retail brand focus, and so it's funny. I haven't saw any Medmen stores. Have you guys heard and seen Medmen stores in Canada? I wonder what happened to this joint venture. Maybe they figured that it didn't really work out too well, and there's some regulation problems. So maybe that's the reason why this didn't move forward. But I would love to see a Medmen store in Canada. That would be kind of cool. Kronos. Okay, so cross-border cannabis partners between Medmen and Metroleaf. So Metroleaf and Medmen work together on cultivation, on product development. So everything that Metroleaf has known, Medmen knows too. So Medmen knows how to make super high quality cannabis because Metroleaf makes a super high quality cannabis. And Aurora acquired Metroleaf for $3.2 billion. So all that knowledge that Kronos has, that Metroleaf has, Medmen has too. And the fact that Aurora acquired them for $3.2 billion, it just, to me, it's Medmen has the knowledge of Metroleaf, and they're worth a lot less than Metroleaf. At the end of the day, shareholders make up what the value of the company is. So one day, maybe Medmen will see a $3.2 billion valuation. Well, when the stock dilutes, then yeah, maybe that will happen. But I'm not saying the share price will go up. But I'm just saying that Aurora paid quite a heavy premium for Metroleaf, and Medmen knows what Metroleaf knows. So yeah, just pointing that out. Okay, so let's go to the investor presentation. Okay, right now they have 32 operational stores. They have 78 retail store licenses, and over time they will build those licenses up. They have a 7% California market share, and I think that's probably in the future probably will grow. So yeah, Medmen does have some really nice designs. At least this is just my opinion, and they're very focused on location. They're very focused on location, and they're very focused on branding. So I think those two are a very good combination. I mean, obviously management is gonna say that, but just from from the stats that they give us, that could be also inflated too. From the stats they give us, it does look like Medmen does do very, very well at the locations. They have 30 licenses. They can open up 30 stores in Florida. That's huge. Florida is a huge population. Florida, I think, is the second biggest state in the U.S. They have the second biggest population after California, and they have 12 stores in California. Not 12 stores up, but they have ability to make at least 12 stores, 3 stores in Nevada and 8 stores in New York. And New York is also a very very strong state for branding. Medmen, like, they have 32 operational stores. They're making about $7,895 per square foot. They're making more than Apple, more than Starbucks, and I don't know what Tiffany & Co is. I think that's a clothing store, but you know, but still, you know, like, they are making pretty good money for per square foot. They, you know, I mean, that could just be they could just compare themselves to Apple to just kind of, you know, make themselves look good. But yeah, but you know, but as more stores open up, this number might go down. Like, if they have 100 stores in the future, this number might be 5,000 or 6,000. But you know, because they have 32 stores, it's easier to get a higher average per square foot. But once they have like 100 stores or 1,000 stores, I don't know if they'll ever have 1,000 stores, but when they have like 100 stores, that number will dramatically go down. At least that's just my opinion. You know, more focus on branding, that's good. I'm just trying to skip to stuff that I think is important. Okay, so right now, you know, these are all the states they have. 78 possible retail locations, 17 factories operational. I don't know if it's 17 operational, but they have a total of 17 in the future eventually. You know, no, wait, no, that's on point. These are all the locations that they're gonna have set up in California. Right now, they do have 12 locations. They have 12 locations in California. They plan to have 25 stores eventually, I guess. And you know, their focus is on brand retail, which is important, I guess. I think it's important, at least for a cannabis store anyways. You know, this is really nice design, I would have to say. In Canada it would be different. The screen had to be completely covered. People are not allowed to look inside, but I guess in the US it's totally different. Trying to find something important, what I think is important. So right now they have 32 stores, and by the end of 2019 they will have 48 stores. And well, they say that they make about $20 million per store annual revenue. I don't think it's gonna be 20 million stores for every store, but I think, you know, let's say the high-end store is 20 million and the low-end store is like 5 million. So let's say the average is $10 million. So if they had 48 stores open and each store was making an average of $10 million, by the end of in 1 year, on 48 stores, that's over $500 million, $480 million. Just do the math yourself. Times 100 times 10 million times 48 will give you $500 million, $500 million of revenue. And then their gross margin's pretty decent too. Having high gross margin is a must in a business, because that's where that's very important. Gross margins. I think gross margin is the most important. Having high gross margin is like a must for a very successful business. That's, at least in my opinion. Some people might argue that saying that is something else. Their own branded product gives them 80% and third party gives 50%. Anything else that I wanted to include in here? Wait. This is the biggest thing. This is the biggest thing, the most important thing. I'm gonna end it off with this. I hope you guys actually make it to the end. But see, they made $29.9 million of revenue, right? And the acquisition that they purchased made $19.6 million. So the combined revenue is $49.5 million. I don't know if that's US dollars or Canadian dollars, but Aurora last quarter made $54 million. and Medmen made $49.5 million. That's very important. I think that's very important, and I'm going to be ending it off on that. So thanks for watching, guys. I hope you enjoyed this video. Subscribe for future updates. Give me a thumbs up. It helps my channel grow, and have a great day. Bye.